The broadcast is now starting. All attendees are in listen-only mode.
Welcome to Coleman Report Live. I'm Bob Coleman, and we're talking Main Street and the small business lender who helps it grow. Looks like we have an all Coleman crew here. Look at that. Dressed in your Sunday best. Welcome, ladies. Welcome, Joseph. A lot of information. Delaney, we're going to start with you. The Senate. Big news in the hearing yesterday. What's going on in Washington as it pertains to small business lending?
Well, it went over quite a few bills. They actually had 11 different bills they discussed during this hearing, but there was one that is probably the crucial one here. It is called the Community Advantage Loan Program Act of 2023. Senator Ernst put a lot of emphasis on this one. They are trying to put critical safeguards on the SBLC programs and all of the flagship programs to protect them from algorithmic-based lending and focus on relationship banking.
Very good. And this is SBA's woes in terms of the relationship with Congress is not at the peril of the House or the Senate. It's both of them are not happy with what's going on with SBA. This is a huge rebuke of their policies, 18-1 bipartisan vote. Senator Ernst is the ranking member. She's from Iowa, and she made it very clear. Well, both of them are. The underlying thing is fintechs. I heard the word predatory was being thrown about. They're rejecting the fintech model of algorithmic. I can't even pronounce it. Very good. And going back to relationship banking. What is she talking about, Delaney?
Well, I have a quote here. The big issue is they're saying fintechs facilitated PPP loan fraud, that's where that algorithmic-based lending comes from. Yes, and so she's saying that allowing an unlimited number of fintechs into these programs while at the same time loosening their underwriting standards is a recipe for disaster. And they've talked about this in hearings in the past, but it seems like with everything going on, they're circling back around, especially as we're nearing that August 1st date.
And by the way, we're not picking on fintechs. We're simply reporting what's being said about them. Open invitation to anybody who wants to defend what the fintechs are doing. I can defend them to a certain extent. We all want quicker processing. We certainly want to use data to make informed decisions. And while there are issues, there are benefits. So more than happy to have the other side of the coin. But for right now, fintechs are being bashed and bashed pretty hard. So maybe another interesting point in this, by the way, Senator Cardin is the chair. He's retiring, and this is his legacy that he's pushing, and Republicans are backing him on that, both in the Senate and the House on these things. But he made it very clear. Community Advantage, they want to formalize it. It's been a pilot program for years, and he wants to formalize it, but he's saying, he gave a twist on the definition, which I find interesting. I like your comment on that, Delaney. He said, Community Advantage, the purpose of it is to serve the underserved borrower. In other words, get rid of all these buckets of what you want to call them, boom, 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 boom. But if you're an underserved borrower, whatever that is, and I think it's the test of you know it when you see it, we want to be able to help. What's your thought about that, Delaney?
I mean, I think it's great, and I'm glad that they're still encouraging this program grow through. I mean, there's overwhelming support for it, but just making sure it's handled and executed properly without putting the taxpayer and the people.
No, but I like the way they're going. He's moving away from, are we in a poor economic area? Are we minority? Are we women? Are we veteran? Are we rural? Dan, are you in an underserved market? Well, if you are in my backyard, if you're a small business in San Bernardino, California, where main streets and everything's getting boarded up, that's odd, and you're trying to open up something out there that obviously is you're an underserved borrower. So I like the way they're going with that. Anyway, open invitation for someone from the fintech. Please come in and tell us the other side of the story. But where we are today, they don't want fintechs to get the SBLC licenses. They want to encourage existing lenders to go after the community advantage. They are SBA 7A, 504. They're not going away. They've got to go through the process. But the good news that we need to remember is Congress is supporting this program. They understand the importance of it on both sides of the aisle. And this is one of the few things they can agree on in Washington. And when you get to that point, good things can happen. But let's go to the underbelly of this. Fraud Friday, what you got for us, Delaney?
So we have a story here that goes all the way back 14 years, about 2009, 2010. For a little bit of background, one of them pled guilty to bank fraud at the end of 2022, but our focus here is Mr. Zilberberg. He was on the board of directors at Park Avenue Bank, and he conspired and aided in a fraud scheme to obtain a $1.4 million loan. So this individual who pled guilty earlier, his name is Aaron, he came to Zilberberg saying, I have this borrower, they have a criminal record, they're not creditworthy, there's no way they can get this loan traditionally. So they went and got a straw borrower to make the loan application and give false premises, false representations, all the work, and Zilberberg, throughout the process, was personally using his position to push this loan along. In the indictment, there's actually a lot of emails where he's communicating with different employees saying like, hey, we need to get this going, we need to get this finished. And it went through, and on the other side, he got $500,000 for his help. The other individual got $434,000, so this borrower really did not get a significant portion of this loan at the end of the day.
Well, what the thing that stands out to all of us is, come on, this is during the Great Recession, and it just went to trial. Everyone else pled guilty. He held out saying, no, I'm not going to do it, and he was found guilty.
Well, something I want to say about that, which I was thinking about yesterday, he's actually an attorney and had his own law firm or law practice. So I'm wondering if that is potentially why he decided to go to trial. This is just my own opinion, but it seems when other co-conspirators plead guilty, that's, unless you have a solid case, kind of the end of your chances.
Yeah, but in this time around, I certainly hope in the year 2050, we're not talking about PPP fraud. And all those frauds are put to bed, and we've moved on. Second story.
Here we have another individual. This was kind of a two-part fraud. So Mr. Stephen Andalora, he was trying to get people to invest in businesses, some of which were real, some of which were fictitious, and to get them to invest, he made false representations, specifically for one business, that they would have a 10% ownership stake in the business. This, of course, is allegedly untrue. He was apparently using the money for personal expenses and, of course, in a classic Ponzi scheme, paying other people's investments back to previous investors. But to also support this, he allegedly committed PPP fraud and got $2.6 million, which he was also using to pay back these investors.
What's he driving? Or what did he drive?
Sadly, we don't get to know any of these personal lifestyle expenses he made.
Whatever it was, it's up on government auction. So, very
2.6 million. I imagine there's probably a couple nice things in there.
Finally, there's another charge that's happening. And what's interesting about this is, obviously, we're following these very carefully, and good for them. But again, the fraud. While a couple of fintech lenders have been indicted, individual bankers specifically, the action is with these borrowers. So go ahead. What did Mr. Rivera do?
Absolutely. This is a scheme with 5 different people this go around, but it seems that Rivera was at the head of it. He was conspiring with other individuals and business owners whose businesses had minimal operations, employees, revenues, profits, and was introducing them to somebody who could prepare these applications along with false tax returns. So these were being submitted, and Rivera ended up getting 15 to 50% of the loan proceeds, allegedly. So this was done with PPP. They did the same thing with Idle, and there was another part of the scheme where, to make it seem like they were paying payroll expenses, they were writing checks to friends and family members, having them cash it and then give it back to the borrower.
And he got 50% of loan proceeds. That's a pretty hefty points. Delaney, good job. Thank you very much. Joseph, you got a poll question for us? What do we want to know?
Yeah, let me pull it up real quick. Sorry, guys.
We'll get to Anna.
Yeah, so we have been following the congressional SBA stat, as we're calling it, for this week, and we wanted to give a chance for the lenders to clean up their portfolios. But let's ask the poll question first. Are you satisfied with the process of cleaning up all those PPP loans in your portfolio? I speak with Lance on a weekly basis about his progress, and it was a lengthy issue for them, but they are getting through it. So let's see what you guys have to say.
Yeah, and to set this up, the reason why we're asking this question is there will be pressure. Pressure's going to come from Congress to the agency, which means it's going to flow to the lender about getting these loans cleaned up and off the books and whatever. And I like those answers. That's nice. It's nice to see 3 out of 4 are satisfied with the progress they're making. 1 in 10 have issues. And I think if you're in that 1 in 10, our takeaway is to prod you to be proactive as opposed to being reactive when the hammer comes down from SBA on cleaning this stuff up, because it will happen. Lance is going to be doing a webinar a couple weeks on this, and he'll be back on Monday and talk about that. Well, let's go to, thank you, Joseph. Let's go to Anna. Anna, you've been putting together an interesting story in the state of California. Tell us what, and this is our newsletter that we're doing. It's called the Coleman's California Small Business Newsletter, if you're doing anything in California. And what they have is California has a state-run bank called iBank, and through that flows grants, as well as if you want to get involved with the California State Guaranteed Programs, working with iBank. iBank did a nice webinar with us about that a couple months ago, and we're going to dust that off again. But Anna, what's this story about? California's first venture capital investment through iBank. Tell us about that.
Yeah, definitely. So it's really cool that this is all administered throughout the state. So through the SSBCI fund, and there's about 200 million allocated from that 1.2 billion that is going toward this iBank.
I didn't mean to cut you off. These are huge numbers, Anna.
Yeah.
That banks can take advantage of.
Yeah.
Work with, and also getting it out to their borrowers. Anyway, go ahead. These are big numbers. Go ahead.
Yeah, no, it's absolutely incredible. So that's what iBank is using to make the investments here through the Expanding Venture Capital Access Program. And that's something that's just incredible for lenders throughout California and bankers, because iBank's mission is to provide that financial assistance and support economic development and infrastructure in California. So them focusing on Unshackled is actually really interesting, as Unshackled is the first and only on-stage venture capital fund focused on immigrants and foreign talent. And Unshackled is dedicated to investing in and unlocking these opportunities for immigrant entrepreneurs who might not have the other opportunities that people have. So it's really, really cool that iBank is focusing on this right now, and that's what these funds are being used for.
And do you have a sense of what type of fundings Unshackled has done? What type of companies? Have you gotten that deep in your analysis?
No, I haven't yet, but that's actually something that would be incredibly interesting to include in the report I'm putting together.
Yeah, I did. I took a quick look at their website, but they're very interested in first-generation immigrants. SBA has traditionally been a very good tool for second generation, i.e. in the hospitality and restaurant industries. But this is sort of a jump start for helping first generation immigrants to enjoy the American dream. So it's interesting to following that. But if you think about this in context, the Treasury allocation for California is on the SSBCI is 1.2 billion. That was SBA's budget up till a couple of years ago. So they ran the entire SBA for less than $1 billion. And these are still numbers that are being funded and left over from from the COVID fallout that we all have. We'll be following that a lot more. Well, very good, Annie. Anything else on that you have for us?
No, yeah, I think you made great points. Very interesting stuff.
Well, very good. Well, thank you all for joining us today for Coleman Report Live. Have a nice weekend. So, and for some, I didn't put that in there. I should just stick with my script, but I'm completely off. Have a nice weekend, and support one entrepreneur at a time. Somewhere in that mess, you know what I'm trying to say. Thank you.
Thank you very much.
Have a nice
Have a
weekend.
good weekend. Bye.